live. Everybody, I'm Ross. Awesome. This is the daily plan for February 6th, 2024. Let's follow up with some of the trade plans. Let's go ahead and turn down that music. Put on our normal background stuff. Okay. Pretty sure we're set now. So 2 days ago on the 4th, we had the expectation of dollar going up for this week. Looks like we hit our expected target to the upside based off the range probabilities. Let's go ahead and check this out as well here. Is this not loading enough historical data? Yeah, it's only loading 2 samples. Let's zoom in here real quick too. Well, there's your probability weighted pivot high for the month. Unless you're getting past this R1.5, you're essentially guessing where the high is going to come in. So quite likely top for the dollar could be in. Maybe I need to get out of my dollar long trades now at this point. We'll go ahead and look at our options and consider that. Look at our closing odds seasonally for the month. Ooh, yeah. Most of your closes are right around there. Pretty infrequent highs. Again, this is 34 years of data. Again, is the 12-hour going to work? No. I'll wonder why the 12-hour is only giving 2 years of samples. Really? Huh, that's odd. There's definitely more than 2 years of samples here. And this was working in a stream not that long ago. Hold on. There's one way to get this working. That's going to the daily time frame and forcing this thing to load on the weekly. And there we go. There's our weekly ranges, or at least our weekly pivot probabilities. Yeah, most of the time the close is a bit lower for this week. Over the last 34 years, most of the closes this week are right around here. Call it 104. So maybe there's another 25 point plus pullback in store for us. Again, that's our high odds there for the week. So we very likely hit the top for the week. The probability would pivot was there. Not far off from the actual high this week. And our low, wow. That is saying we do something along these lines here. So that'd be red. And then sort of like a bounce into end of week. It's quite volatile. I don't know if we'll actually end up getting them. But who knows? We have a bunch of earnings coming up tomorrow, and if those earnings are A-okay, then on the 7th, that is the day we're getting Disney earnings tomorrow. I know that much. 4, 2, 6. So yeah, maybe it's time to flip. Again, this is just seasonality for Zadar. I do want to check out the monthly level one more time. Yeah, there's definitely room to go lower this month as far as the dollar is concerned. And yeah, we hit a likely low here. So that was nice on the rebound spot. Now we've hit a likely high here on the month. So net, you could end up with maybe a move over the next 2 weeks that takes you. Again, just kind of shooting the shit. Looking at the options. So down and then down again the following week. Because we do have earnings in this week and earnings in next week. Okay. Let's apply our cones here. And that's all within the nominal range, the first standard deviation band of the cones for the month ahead. So nothing terribly crazy here. All right. Let's go ahead and check out. I actually wanted to check out Japan quick. Yeah, Japan had a pretty bad day today. Just above 35K, maybe is the expectation. Or this lower spot just in the mid to low 34Ks could be the expectation for them. Let's check out the seasonality here. Oh, that actually lines up. 30% of the time your low comes in that spot. However, these pivots are quite wide ranges. So yeah, and this is your tail situation. You can actually see here the low probability tail here, how far this, look at this tail. Tail on this distribution for where your lows come in. But yeah, this thing says, hey, if you get your low in this tail, it's probably going to be in this, call it 1,000 point plus range. That the cutoff for that would probably be what, 33.8. I don't know if we're going to actually see something that causes maybe a real estate crisis in Japan. I don't know. Australia, they're holding in there. Looks like they got a bit more chop in store for us. Probably could have topped out here on the month. Euro 50. Wow. I don't know. This chart doesn't look correct to me. Yeah, something's going on with the data on this chart. I'm going to find another Euro index. Let's see here. In New Zealand. Again, let's try this. Yeah, I wonder what's going on. The placement of this is not correct for some reason. So I wonder what's going on these charts here. Let me try saving and reloading because I've never had this problem before. All right, works on S&P USD. That's fine. France. Yeah, there we go. So probably found a likely low. So Euro seems to have a good candidate in France. Again, what's going on? Why is the placement of these things off? Yeah, what's going on there? It's so trading views changing stuff in the back end. I've never seen that happen with my indicator before. That's stupid. Ah, man, another thing to try and fix. If I can figure out what's causing it. Anyways. Yeah, not too much there on the UK side to interpret. Here we go. Probably a likely high on the week. Cross above 77.25. Probably dealing with 77.60. Let's check out NASDAQ. NASDAQ at a likely low. Yeah. That does not look like a good bar. There's a lot of talk about shorting Apple and shorting Tesla. The Magnificent Seven. So we'll probably end up with a move down here to this 50th percent level. Call it 17,300. That'd kind of have to be on the cross. And by the cross, I mean a new low for the week. Something like that. It's very close to a 1-to-1 risk to reward trade in this situation. And even that, I'm not too keen on taking because of earnings. You can get some volatile snaps, some big wicks during earnings. So, gotta be careful during the earnings cycle. Alright, USD CAD hit a likely top on the week. Now it seems like it's reversing. The yield spreads are moving still positively, so in favor of the US dollar. So we'll have to wait and see how that develops. Oh, it's in a gap right here, so it's probably gonna still end up going a bit higher. Yeah, the short-term yield spread is improving here on the daily, causing a bit of a mixed view here. Probably over earnings, you continue to see this stay mixed or maybe improve and you see more green here over the next couple of days on USD CAD. And then either towards the end of this week or sometime by the middle of next week, you're at 136. And we can go ahead and plot that. Let's see here. That'd be, we can do something like that. Still got bullish expectations up my sleeve. Oh, that's the Chinese yuan. Yeah, yield spreads aren't the most helpful in this scenario, frankly, because this is not a... These are all very, very much controlled yield spreads. But you can still see how... Oh, bearish. Bullish. It did hit a likely high on the month, though, so we'll have to see if these yield spreads hold up going into the end of the month, but on the week. Well, it was a likely high on the week, especially if you were bearish, and just tapped into this peak right here. Yeah, maybe you got out there if you went short up here. Maybe you didn't. It's honestly, I think, much more likely that you didn't get out. So maybe you're seeing these pullbacks, two little wicks, and saying, maybe it's time to get out with my wins from the short here. Yeah. Pretty good setup there. So this is the euro pound. Let's not do cross pairs. Pound dollar. Wow, that's moved much more. I did get out of this trade. I did take it and get out. Yeah, what is with all that redrawing? It's too weird. Anyways, looks like the yield spreads are now improving a bit compared to yesterday and the day before. Thankfully, we can use replay mode to check this out. So you can see a bunch of yellow in this part of the indicator. Some green, some red, net, it's flat. Oh. And then on the day following that, nice improvement in the yield spreads. Still mixed on the short side of thing on the short term over the last 3 days. And then today, it's flipped. The yield spreads are improving intermediate long term and are bad on the short term. But the intermediate and long term yield spreads improved quite significantly. So we're going to have to wait and see over the next 3 trading days going into the end of the week, beginning of next week, if this intermediate spread continues to hold strong or if it also keels over. And at that point, it's going to be a sell somewhere probably midweek up here. But yeah, that was a nice little catch, and we did that ahead of time too. I don't necessarily have an expectation of where this thing is going to end up. Yeah, very unlikely to find your season. Let's check out the highs. Yeah, if you are going up, you're probably getting to this spot around here. Call it the mid 126s. So that's if the yield spreads do begin to pick up. So if those yield spreads do improve, I would set this as my expectation going into kind of Thursday this week. Aussie dollar repping higher today, but the yield spreads are pretty horrible. So I'm going to stay more cautious on this pair. Yeah. Something more like this over tomorrow. And then potentially lower into the end of the week. Again, just because I see something on the chart or I'm making a best guess estimate from what I'm seeing, doesn't necessarily mean I'm going to be right. These are my best guesses. Let's talk about the scenario where this is wrong. And actually, let's also set this to blue. So the short trade would be somewhere around here. And the stop would be, I'd say, give or take here. I mean, you could use this 65.50 spot. That seems to work out for me, source risk reward. And then this would be an end of week trade. So either you're taking this at a specific risk to reward, bounce back, call it 201, or you're just holding it into end of week. Because I'm pretty sure next week's seasonality, that can get pretty bullish next week. Look at that. 95% of your highs next week are above this R0.5 pivot. So there is definitely bullish room next week. Next week is pretty darn bullish. Ooh. And there is a high concentration of lows next week between these two spots here. That looks good. Let's see if that lines up with any of our ranges currently. I know it's a bit messy. So it's kind of split between this more conservative spot here and this more aggressive spot. Kind of the lower end of this, the higher end of this. Kind of like what we had with this week. Might be useful to use a more biased look back. See if that changes anything. Oh wow, check that out. So it seems like the more biased, it seems like we're probably in a more unique regime than this is a bit better. Usually short-term data is fit better to the more recent results. And because you have, depending on the autocorrelation of the series you're looking at, that may make more sense or not. Again, it's all a bunch of it depends, but this seems like an appropriate use right now. And yeah, there you go. This spot right there. That's probably where I'd set my expectation. So we'll have to see where that spot is next week. And again, as this thing prints and widens these pivots, it could change the location because we still have the rest of this week to trade out. Again, the whole point of having these next week, next month ranges is for trade planning. Let me go ahead and lower that music just a tad. Yeah. The whole point is just to have an idea of what to expect ahead of time. Oh, next week is usually very, very bullish. Maybe I need to look at buying lows this week and carrying that into next week so then I essentially have some easy trades for the next 2 weeks here. Try and make things easier on yourself, not hard. New Zealand. New Zealand's a bit more of an interesting bunch because I thought this one had a more bullish yield spread, but it seems a bit more mixed at the moment. Let's go ahead and set this back. Well, in this case, I definitely would be more careful. Because if this were to break this threshold here, you're going into a gap, you're likely going to go up here. It's essentially the same. It's the opposite of this trade here, right? Instead of going short at this spot because of my bias from the yield spreads, New Zealand dollar is bullish because the yield spreads are more mixed, neutral. Don't get me wrong, Australia and New Zealand are quite correlated, and these are US dollar pairs. But if we get decent earnings, and that sends the dollar lower off decent earnings, because of higher growth expectations with disinflationary pressures. Actually, no, that usually makes the dollar stronger. Yeah, I'll say this much. The analysis that I hear from a lot of commentators on, when the stock market goes up, the US dollar needs to go down. That's not how the US dollar works. That's just not how it works. The US dollar goes up when the United States is strong. So if the United States is disinflating at a faster pace than the rest of the world, the United States dollar will get stronger. If inflation is increasing and the rate of growth is also increasing in the US stock market, then the US dollar can still get even stronger. Because the rest of the world isn't growing as fast. Okay, when it comes down to FX and figuring out what makes it go up or down, there's 20 different reasons and 20 different things that have to get modeled. Because the axioms that people use, like, the stock market going up makes the US dollar goes down, only applies some of the time. There are assumptions behind that axiom. And if you don't understand the assumptions behind the statements you're saying, you're going to end up confused, and you're going to end up making stupid decisions and losing money. And that's why trading is hard, because those assumptions behind common sayings are not explicitly expressed. And it trips a lot of people up, and it's hard to figure out what those assumptions are because there's no book with them in them. It's a bunch of generally speaking, it's a bunch of statistics. It's a bunch of regime statistics. And the correlations and the relationships, they break down, they change, they flip. So you always have to be constantly testing the assumptions behind the things that people are saying. And keeping up to date with a wide variety of what things people are saying and methods that they're doing their analysis with. If you don't have a wider variety and intuition of why people are making the decisions that they're making, it can be very easy to get lost in following the news and why CPI going up or down in this or that country moves this asset up or down. And it may seem like other people know more than you, and that definitely can be true. But usually it just means in trading, someone else is faster than you. Someone has a computer with a model of this axiom and the assumptions behind them put into math and code, and they're just running it faster than you can. And that doesn't mean you can't make money trading. It just means that it can be harder, and that you need to not necessarily work harder, you need the better tools. So consider following these steps. consider looking at how, I'm looking at things. See if it's a style you might want to check out. All right, euro dollar. Oh, come on, trading. We don't need you going kaput, son. I still have negative expectations for them. Still. Update that. Down negative. I still got negative expectations here. This might be a more opportune short, in my opinion, than that Australian. Where is a likely high next week, tomorrow? So that would be right off the bat here, or somewhere a bit higher around here. Let's go with like right here. Set up a stop. Yeah, it's gonna have to be there. And then, yeah, see how that works out. And go ahead and set an alert on if we crack this prior swing high. Take a shot on the short. See if it matches up tomorrow at that spot. And yeah, piece of cake. I'm gonna skip the yens except for dollar yen. Oh, that looks like a very good spot. On the day. Let's see. On the month, on the week, it's also a pretty decent spot. Yeah, this is probably like belong right now. Something like that. What price is that? 147. Let's call it 73. Looks good to me. That looks like decent risk to reward. That was ours. Yeah, and also good closing odds. So this would probably be an end of week. And when I say end of week, what I'm saying is there's no clear upwards target that you can reliably forecast to hit. So either you're setting the expectation that you're going up to this cluster of high probabilities, or you take a nominal view into end of week, which is closing anywhere from here, nominally in this blue zone, to up here. So let's do that. Let's take our nominal. Let's also check out the seasonality here. So seasonality says, hey, you could go quite a bit lower. 50% of your lows are in this spot here. That can be quite significant. And then on the high side, is this your best peak? Yeah, that's your best peak. So a lot of the time, your top for the week comes in right around here. So that's a fairly good shot on the short side, frankly. A fairly good one for short US dollar. Wow. Pretty good shot on short US dollar. And now it's a matter of, is this a tug of war? Does this thing go sideways? Does it break? Because if it breaks, it's going to go to 147. Now you're talking 100 pips from here to here, or at least close to it. That can be quite a significant move for FX guys. 100 pips, it's quite significant. All right, let's check out gold. Oh, actually, some of the titles in the headline here. The Great Contraction. It's Hollywood. All right. One sec. Let me screen this, get my stuff organized here. Zoom in so you can actually see what's being read here. Quote, "The Great Contraction is upon us," said one veteran television executive, speaking on condition of anonymity. I know, people are like, people don't like how I say anonymity. This is how I say it. I think there will be a significant retrenchment in the quality of content and the amount spent on content. The contraction story will figure predominantly as Walt Disney, Warner Bros., and Fox report quarterly results this month. It is also the backdrop for media merger chatter. The most recent sales talks between the owners of Paramount Global and Skydance Media, the people who produced Top Gun, Skydance. Oh no, it's Skydance and the guy who co-produced Top Gun. All right. Let's see here. Wow. Broadcast and television advertising will end 2023 down 7% from the prior year, with total advertising declines of 11%. Wow, advertising is dead on TV. Yeah, traditional TV has been hollowed out by digital advertising, along with print and radio. The outlook for 2024 is not much better. The shrinking traditional TV business still accounts for 80% of their total advertising revenue for these media companies. So the question is, are they going to get a significant bang for their buck if they continue convert that 80% into digital. Well, you know, X or Twitter is not going to have the advertising problems that they were once having if even 5 or 10 or 20% of this 80 comes back to the fray online, because some of that is going to go to Twitter. Let's see, streaming services, even the market-leading Netflix slashed the number of scripted series it released by more than 1/3 from, yeah, so Netflix is already ahead of the pack here. So let's go and check out these names here on the chart. First up is Disney. We'll get to gold, don't worry. Yeah, I would not be surprised to see Disney trade at $99 this month. Would not be surprised. In like the $99 to $100 range. I mean, if it gets close, it's probably going to breach $100 and then zip back. But you go past 101 and now you're dealing in a slip and slide area. You don't know where exactly high is going to come in with a great degree of confidence. And by the way, this ray that's getting casted out into the future, these are annual forecasts from people who are making buy-sell recommendations. So this is the minimum forecast made. This is the maximum forecast made for a year ahead. This gray line is the average, and this orange line is the median forecast for a year ahead. And this only works on some stocks, but I'm looking at it and thinking, yeah, probably do something with that. Potentially that's cone related, right? And check this out, big wide range and a negative skew on the cones here. Not particularly great. Not particularly great as far as that skew goes. But you go ahead and you hit 100, or you hit this 99 spot, right? You hit that spot on the cone around here, and you can reverse there. You pass through it, and you're dealing with the whole no man's land situation. Let's look at our closing odds in the month. It's pretty sideways, pretty flat. So there's a bit of a skew up, seems. No, actually, I can visually inspect it. From here to here, $3.84, and then here to here is $4.61. Yeah, the skew is not high. Not good. Let's check out a couple more things here. Yeah, a lot of highs around this R1 spot, roughly where the range is. We're pointing out the high comes in around $100, maybe just below it. And on the low end, I mean, maybe your low is in, but if that earnings fails, you're going sub 94, which would actually be a great short. All right, let's go ahead and check out Warner Bros. Warner Bros. The high is probably in. The high is probably out. kind of hard to figure out where the low is going to come in based off seasonality. How about this? Pretty bad seasonality. Maybe you get some positive movements from this 9th to 11th trading day. So that's the 13th of February to the 15th. Yeah, the 12th. No, yeah, the 13th of February to the 15th of February is the 9th to 11th trading day. Those days are pretty good. So maybe on the days before that. So call it end of week, beginning of next week. Maybe there's a rotation. Some seasonality comes into play. You get big negative drift, so be careful. Those might just be sell the rip situations. Oh, let's actually bring out our analyst targets here, which are a lot more optimistic, it seems, for Warner Bros. A year out. Warner Bros. Is currently at $10, and the maximum is what, 23. The median also has a nice positive slope, and the average has a nice positive slope, unlike Disney. One of the other companies mentioned in that article was Fox. Hey. Also a nice positive slope, yeah, so Disney is getting hit hard. And then Paramount's flat. It's got some upside skew to it, but looks like expectations aren't fantastic a year ahead. All right. Let's get our chart back here. And I'm pretty sure the next one here is oil. Yes. U.S. investors trying to get bullish as global economy improves. By the way, John Kemp, if you don't follow him already, he's a fantastic commentator and probably the one oil analyst that I habitually follow. He writes with a very... He doesn't really write with a bias. He reports, and he doesn't try and sensationalize expectations. Anyways, hedge funds and other money managers purchased the equivalent of 97 million barrels in the 6 most important petroleum futures and options contracts over the 7 days ending on January 30th. Let's see here. Inventory depletion around NYMEX delivery point at Cushing in Oklahoma continued to draw buying in. Brent and European gas oil saw buying after attacks on shipping effectively closed the southern Red Sea and Gulf of Aden to tanker traffic associated with Western Europe and North America. So let's go ahead and bring up CL, crude oil futures on it. So yesterday, or rather 2 days ago, we made the expectation that we'd see a move higher, and probably significantly higher. I had more bullish expectations. One thing to note for you guys, geopolitical risks are very... the half-life of their impact has to be observed. So initially, when they come to fruition, on the day or for the week or maybe a couple of weeks, the impact is real, the concern is high, and the volatility is high on the realization of geopolitical risks. Otherwise, in 98% of most geopolitical risk situations, they are faded. Russia, Ukraine. If you were trading at all, Russia, Ukraine, right? Like, everyone's like, oh my god, Russia, Ukraine, right? I'm pretty sure, right? Invasion of Russia? No, invasion of Ukraine. We can go to nat gas. So I believe nat gas is just NG, right? Let's see here. Invasion of Ukraine. I can't remember the date of the invasion of Ukraine right off the top of my head because I, you know, when it comes down to trading history, it's important to know those things off the top of your head. It's like, I want to make a good example. Say, hey, you know, invasion of Ukraine happened around here, and now it's just plummeted. I mean, crude oil does not look as bad, but you can see a similar effect net invasion of Ukraine and the half-life of geopolitical events ensues. And then SPR refill was around here, I believe. Yeah. Biden was refilling government reserves around this spot, and will probably continue refilling if we get below 70 over the next 2 or 3 months, especially if we go into the summer months. There's a risk of going below 70 again. But for now, we got some good news. Naval and air operations by the United States and UK against the Houthis, as well as convoying by warships, had not yet reopened the waterway to vessels at risk. So operations are starting. People are beginning to get the Houthis out, hopefully without starting a war with Iran. Redirecting east-west crude and diesel trade on the much longer route around Africa will absorb inventories and temporarily tighten supplies to Europe. Well, while that might be the case, it's not necessarily affecting the prices. At least not significantly enough to matter. Alright, since the cutoff for last week's positions report, prices have drifted lower as traders anticipated the waterway closure was fully priced in, and the probability of early interest rate cuts diminished. Again, this is what makes people traders. Anticipation, expectations, the change in expectations. The expectations we have today set our positions for today. And as new information comes in, we then figure out what has changed. And if things are changing and we can begin to make an expectation or have an anticipation that things will continue to change, good or bad, then our job is to try and predict the future and trade. And this is where generally the smarter you are, the easier it is to figure out what those patterns are. Until then, hedge fund managers had become neutral or even moderately bullish compared to the extremely bearish views that prevailed in the middle of December. And then this goes into net gas. Let's see, investors sold gas futures and options in despair as milder weather across Europe, Northern Europe, and Northwest Europe crushed the outlook for gas consumption once again. That's right. They had a pretty easy winter. Mild weather has postponed the normalization of inventories and ensured prices need to stay lower for longer to force a further slowdown in drilling production. Gotcha. There's a couple more things here This is the SLUES survey that I mentioned yesterday. The only thing in here that I thought was terribly relevant for the stream was, hey, they're going to be offering less credit card and mortgage loans. Yeah, loan offerings across the board for businesses, retail, are getting tighter. Yeah. If you don't watch me too often, you probably know I still follow the geopolitical stuff, even though I just kind of railed about the half-life of it. But knowing when a geopolitical surprise is more likely than the rest of the market who aren't paying attention to geopolitical developments is in and of itself an edge. So doing stuff like getting emails from the Department of Defense and reading about the latest robotic vehicle tests for AUKUS defense is going to be an insightful read. The link to this is in the Discord, in the geopolitics channel. I'm not gonna bother reading that to you guys. So let's go to Go. Well, low for gold is likely in. Don't get me wrong, there's probably some room to test like the low 2020s. But if you get past, call it 2010, you're now dealing with a slip and slide situation. I don't know. I still have my expectations for reaching close to 2100, call it between 2090 and 20, yeah, I call it 2110, like this $20 range. So I would have bullish expectations to check out these prior highs. Hey, and for those of you who are pretty smart, notice what I just did. Instead of looking back and drawing lines into the future, I looked at the current situation, made an expectation, and then looked back into history. Like, oh yeah, there's guys who are doing TA that think that's going to happen. Sweet. I'm already a step ahead. Let's look at our cones. Yep, it's inside the nominal range, the green spot. Closing odds, we do have a skew to getting our closes more dispersed on the upside. That's interesting. Come on, seasonal forecasts. Load. Let's check out the seasonality for gold. Relatively neutral. Seems like most of the bullishness for February is going to be coming in sometime around this 12th trading day into, call it the 19th. It's quite choppy still, but that's still next best scenario. So in the latter half of the month. Ah, yeah, check that out. Probability weighted pivot low hit. Yeah. Oh, yeah. Still room to hit that 2100 spot. I am not totally sure what the path is going to be, but I'll go ahead and put in an expectation. Let's see. Gold. We can also do. Decent shot of going back to these prior highs from the last week. Depends. Will earnings do fine? Yeah, I'd say I kind of nailed that spot. I probably wouldn't be trading this now though, because it's already on the move, right? The spot to get in was around there. Go ahead, set this to low. Yeah, check that out. Probability weight to yeah, probability weight to pivot low. There on the week and there on the month. Yeah, the spot to get in was over these couple of trading days a bit early. Again, if I was watching, probably. But now that it's moved, it's don't get me wrong. There's still movement there, but it's a lot less significant than saying, "Hey, I got 30 points and I have upside potential for 30 points on top of that." Then, yeah, it's just going to be a situation where this is the next best opportunity for long gold is, or at least in my view, doing discretionary stuff, it's going to be buying a low next week. Or if the aggressiveness needs to be done, go into a daily range. And then attempting to buy a decent low tomorrow, but this is still quite a wide range of options here. Price-wise, yeah, it's going to be quite a big stop there. 7-point range there. And then you're going to put whatever that is plus another 7 points of stop on that from don't get me wrong, there's definitely going to be options for people who really want to try and get into stuff to rationalize a reason or way to get into positions. That's why you never try and work yourself up too much about the money. Let's see here. Bitcoin. Holding up. I think I mentioned, no, there's a bunch of layoffs coming off of that Hollywood story that we did. And then there's going to be a bunch of tech layoffs this year on top of that, and the layoffs that we've already had. I would not be surprised to see some of the people who either got laid off from Hollywood or from tech to essentially start new crypto influencer scams or trading scams or investment scams. Some of those people might feel desperate that they're not going to be able to find a job, so they'll get into crypto and they'll do some dirty work in crypto. Or maybe they'll be honest and trade it proper, or maybe they're smart enough to get hired by a crypto organization programming something crypto related. We'll see how it goes. But net, the people who are leaving Hollywood and tech who get into crypto 95% of the time getting in it for the money. They don't actually understand how the economic system works. They don't actually understand the anarcho-capitalist beliefs of Bitcoin. It makes me want to pull my eyes out when I hear that stuff. So, don't get me wrong. All the early guys who were in Bitcoin were pretty much almost exclusively libertarian and caps. I would know. Oh man. Fun times. But they're not necessarily the nicest people that you want to associate with. Like, those are cypherpunk type legit hacker guys who will get mad at you for asking them very basic questions about how to use a computer or how to do some programming task. There's an elitism in that sort of subculture around Bitcoin. You know, thank God for Satoshi Nakamoto. He was very generous and very understanding, and generally in the forum was polite. Fun times. Good memories. Glad I have. Anyways, looks like the dollar is getting. Let's check out this yen play. Or the dollar is getting weaker. Right. Dollar is getting weaker. That yen play is in the drawdown. Yeah, look at that. Decent risk management. You give it a little wiggle room. That's what a stop loss is for. And when you know, okay, there's a greater probability than not that we go significantly lower, that's your threshold. And so you stop thinking of your stop loss as this arbitrary spot you get in and out of your trade at after you've lost, 10% of your portfolio. Use a stop loss as the threshold for when you were wrong on a trade or where you expect to be wrong. I mean, that's probably a better way to approach a stop loss. Wherever you expect to be wrong ahead of time, given some information about some trade. Again, stay safe, you guys, when it comes down to trading stuff. All right. I've been going for an hour. I've done my time. I'm gonna get up, grab some food, and then get to programming some more stuff. So doing some more programming here. I'll go ahead and I'll talk to you guys in a bit.